Welcome to Markets Now. I'm Michelle Rook along with Dave Chatterton with Strategic Farm Marketing. So lower grains this morning. Live cattle are lower as well, but we've got feeders and hogs to the plus side. And Dave, we are seeing a big sell-off in the grain trade continue today after a pretty ugly day yesterday. New lows for the move in soybeans here. You know, talk about why we're seeing all this pressure. Some of this is just risk off, isn't it?
Yeah, Michelle, it's been a tough couple of days here. I mean, you look at where we were at. We started with July corn, above $6 yesterday. We're now pushing that 580 number near the open today. Beans, 70-cent fall here in the last 24 hours, high to low. We're trying to recover just a little bit off those lows this morning, but I think the markets here in the grains definitely feeling the weight of the outside in the macro market here. And the worry here is on interest rates, it's on inflation, it's on economic performance and consumer demand and spending. And we're seeing a rotation lower at the end of the month here in a number of commodities. So crude oil is probably a great example, but really outside of the meat complex, it's really kind of, commodity wide selling. The indexes are all turning lower here. And as you said, this winds into the end of the month. So a lot of this is about money flow and kind of where we're going in the macro, sense of risk on, risk off, as you mentioned. I think there's also certainly an element here that's concerned about grain demand and willing to kind of, if you want to put it in those terms, bet on the come in terms of the rains that are out there in the forecast starting in that June 9th, June 10th time period. And that's a long way out to make that bet, but the market seems content with it here, at least for now.
Yeah, no doubt. So as I mentioned, new lows for the move in soybeans here. These are lows we haven't seen for quite some time, but where do we find support next?
Yeah, it's been a little bit of a tough go. I think most of our producers are watching the new crop at this point. There's not a lot left in the old crop, and basis is certainly a factor there. But when you look at the new crop we're trading today, 1141 right now, not a lot of good chart support long term until we really get to that psychological number of $11. Now we've got, we've had the funds short in the corn and the wheat here for quite a while, and they continue to build on that just a little bit. But we're now, as of this morning, showing the funds net short just a small amount of soybeans, 5,000 to 6,000 contracts. Now, that's far from a record short by any means, but it looks like now they may finally be willing to lean that way as well, Michelle.
And what about corn? Because the last time we had this pullback, we got a good support bounce off of 550 on July corn, December at the $5 mark, but will those hold this time around?
Well, I think there's certainly the targets here as we go forward. Funds are already, fairly heavily short corn. We'll call it 100,000 contracts. That's well off of what would be a record short of around 375,000 contracts. But how much they're willing to push that in terms of the entire growing season or almost the entire growing season still ahead of us, I guess remains to be seen. But for the moment, those old contract lows are the target. I think eventually, if you project forward on the USDA balance sheet, if you look at where we're at in terms of being behind pace to meet USDA projections on old crop corn exports as well as old crop soybean exports, those balance sheets get heavier, not lighter. And when we look at these new crop totals at a 2 billion or a 2.1 billion plus type of a carry out for new crop corn, you put that in a pricing model, you're going to come up with something closer to 450. So we would have some work to do if that's the case. I think the weather here is certainly something that we'll have to talk about at some point going forward. And USDA, keep in mind, has some very high yield targets in their current balance sheets for the 23-24 crop. A record in corn at, above 181, that would be a record by almost 5 bushels versus our previous national record. In beans, the second highest yield ever. So certainly some things need to fall together to get to that point. But the market is it's a futures market. It's looking down the road, and that's what it's seeing right now, and that's reflective of the price action that we've had here so far this week.
So is wheat just following corn and soybeans, or are we trading the higher dollar there? What's the press there this morning?
Yeah, I think it's all of that, Michelle. And unfortunately, the export side there continues. We saw Russia lower their values again here this week on their wheat offers. They continue to kind of set the market in terms of where those exports are at. But new lows here, really across the board. I think we've got July, Chicago now to 26-month low here. We've got drops in Chicago and the KC and the Minneapolis as well here. And wheat trading below corn here for the first time since 21, and it was a pretty brief stint, but be interesting to see kind of what happens there. But even with the expectations for the hardwood wheat crop here in the U.S. and rain now finally coming at a time when probably they don't want it and the wheat is headed out and heading towards harvest, we have not found any momentum to the upside. Things can change very quickly, as we know, but right now this macro weight is really showing itself to be a tough barrel to crack here in terms of these grain prices.
And Dave, even at these low price levels, we continue to hear of European wheat that is being imported into the United States.
Yeah, we saw another, or I guess we have talk of another 60 to 70,000 metric tons being imported last week, split between Germany and Poland. Those values work their way in. It tells us that our export numbers and our values in general are still too high, very similar to what we see in soybeans. And I think that total now is pushing about 270 to 300,000 metric tons total in terms of what is rumored to be imported from Europe in terms of the wheat. So that's a problem. I mean, it tells the market that, hey, we haven't found a price yet that's stimulating demand. And that's part of the calculus here as far as the action that we've seen.
Yeah. And you talk about these longer term lows in Chicago, 2-year lows here. So on a chart basis, though, where do you find next support in any of the wheat?
Yeah, it's a good question. I mean, we're looking at July today, 581. I think you're looking at a 554 to 558 type of a support level here next. Below that, you're dropping all the way down closer to 520. So it's not a pretty chart picture right now. We'll get through the end of the month here today. We'll see what happens when we get started with the month of June. But the path of least resistance here has definitely proven itself to be to the downside here of late.
So live cattle setting back here after new contract highs yesterday, and it's end of the month, so you might expect that we would see maybe a little profit taking.
Yeah, for sure. Cattle are a very curious market here. I mean, we know the supply situation and the fundamental situation. These front-end fed cattle supply is still very friendly longer term. The cash markets have been firm. We've got another short production week this week. Our slaughter and kill numbers are still, looking down versus where they were last week. And the boxes are still on their way up. The live, we haven't had much of a market yet this week, but the offers are certainly higher and pointing higher this week. But when we look at that situation, we've got near record fund length in the cattle, which is very unusual compared looking at the rest of the commodity complex, and particularly in the grains. And I think that long can be a little bit vulnerable here to this risk-off sentiment. But at the end of the day, I would expect that, like today, we're a little bit overbought on these charts. We're going to get a little bit of a correction that wouldn't be out of line at all. But how deep that correction can go in light of the fundamentals, I think, is the question. And the answer to that is probably not very far. So I think we continue to find good underlying support in the cattle, despite what looks like a kind of a toppy situation chart-wise and fund position-wise.
Yeah, especially with the futures at that discount to where the cash is, for sure. So conversely, the hogs opposite situation there. We've got the funds almost record short. It is the end of the month, though. Do you think that most of this is just some short covering we're seeing in terms of the strength?
Yeah, well, it got started yesterday, a very strong bounce and limit type moves, and then we're kind of continuing that today. So, to me, we're ready for a bounce off the bottom. It was a pretty tough 10 days there. I think we were lower, made new contract lows, I should say, 9 of the last 10 previous sessions, starting with before yesterday. So the market is definitely a little bit overwound, as you said, funds in a near record short position. And we're finally seeing some relief in terms of the cash markets in pork have not turned the way that they have in beef or shown the strength. But what we're seeing is that the live animal weights are dropping very quickly. It looks like producers are pushing out the non-profitable animals very quickly and shrinking their herd sizes very quickly in terms of where we go. And that points to a situation later in the year where these front-end supplies actually start to tighten a little bit and look a little bit more like the beef complex. Now, we have very large freezer stocks to pull from in terms of where the pork is at right now, but at least it's moving in the right direction, and probably a situation where funds don't want to press that short a whole lot more. So again, I think once we get through month end, we'll get a better or a more accurate read on the true direction of the market. But we've got at least a little bit of a stopping point here. We've got a long way to go to get above last week's high on the chart. So, can't really count on any reversal action just yet, but at least we're taking a step in the right direction.
Okay, well, let's hope so. Thanks so much for joining us, Dave Chatterton with Strategic Farm Marketing. That's Markets Now.